Officer at Equity at JM Financial Asset Management, here to speak with us and give us a perspective. Hi, good afternoon, Satish. This is Harsh here. Let me start off, Satish, with trying to understand where is it that you're seeing Indian markets at the current juncture. We've flatlined over the last, maybe if I call it 13 months odd, and we've seen a bit of a correction, we've seen a bit of a bounce back. Where do we see things at the current juncture? Give us a view.
Good afternoon, and thanks for having me on your program. What we expect is that the market valuations are fairly rich even now. There are pockets of value emerging in the BFSI space, some of the utilities, some of the metal names as well. So what we see is that value is emerging gradually in some pockets, and the growth is also picking up in the economy. Corporate profits are also picking up. So I think the momentum should improve going ahead, especially for the markets.
So okay, you seem fairly sanguine. So the time correction, you believe not good enough, and maybe we'll see another 3 months of sideways movement, and that would be fair. Would you believe that is so?
Yes, given where valuations are, either a market correction or a sideways movement would make it a little more reasonable for investors to look at.
And if one were to look at bottom-up sectors, stories, pockets that you're liking, you spoke about the financials, which you find attractive, at least at this point, to a certain extent relative to others. Which are those pockets which are looking relatively better for a tactical play, 6 months to 12 months?
I think in terms of relative valuations, even though growth may be lower, large caps present a better allocation strategy, as well as also having an exposure to some of the BFSI, telecom, utilities, and even pharma and IT are coming into the reasonably valued zones.
And utilities, how would you judge that? Because it's a pocket where we've seen very, very strong returns already. And we've seen maybe a year and a half of sideways movement now to a certain extent. Where within utilities would your picks be?
Some of the alternate utilities, green energy, these are areas where we are a little more positive. It may not be just pure utilities, but supplies to utilities like companies in the cap goods space which supply to utilities to build up their capex, and some of the green energy space as well.
Satish, your views are unique. There's no way to play GST. There's no way to play consumer. At least I don't hear it. Give us the thesis there.
No, in terms of GST, what we see is that, yes, it's given a shot in the arm for the markets and sales have also picked up. But we need it to sustain. And what we have seen is stock prices have moved ahead of expectations. It has to get reflected in numbers and it has to sustain. And that's where we are waiting and watching per se. But having said that, it's clear that there is more money in the hands of the consumer due to lower tax rates. The 8th pay commission will also pay off over time. And we will see a situation where the lower inflation also translates into higher consumption. So our portfolios also look at consumption and have a decent allocation towards consumption as well.
Satish, you spoke about pharma, you spoke about IT, but not with as much conviction, I beg your pardon. How much of a correction likely would get you interested? Because IT has been extremely range bound, right? The IT index has fluctuated between 33 and 36,000. Do you believe that a slip from here, 5-10% is warranted, and that would make you interested in how IT looks in terms of valuations?
I think we can't use a simple brush and a single brush for all IT. What's happening in IT is that the large cap IT names are finding it a little more difficult to grow as compared to some of the smaller companies and mid-sized companies. So the preference would be towards those companies or companies that have an active AI component. So that's something which we need to highlight. And so it's something which is a tale of two halves. Uh, the IT index is weighed down by some of the larger companies and not the smaller companies. So it's irrelevant to look at the index alone.
And Satish, are you sitting on a larger pile of cash? Is that at all something you're doing? Because if you're not positive equities in a large fashion and you're expecting a correction, is that reflecting in your portfolio or you don't take cash calls?
No, we don't take cash calls, Harsh.
Okay, got it. But if you had the option, would you be sitting on cash at this point? Is that what you would advise someone investing in your mutual fund?
No, a cash call is a fairly dramatic call in the sense that the only outcome that favors cash is a market fall, a sharp correction. In a situation of a time-based correction, it really doesn't help because all it does is it reduces the volatility of the portfolio, but it doesn't help you earn extra money than allocating to good quality stocks.
You know, the other piece, Satish, that's playing out at this point is within the consumer space. There's plenty happening in leadership rejigs and changes. Something like Britannia has seen that now, and along with it, there were another big a couple of names who saw it in the last 6 odd months as well. Your take with regard to these changes, does it in any way diminish the story in some fashion? Does it put the strategy of some of these companies in your sense?
No, so in the consumer names, what happens is that we need to break it down again into mature category consumer names in such as FMCG, the traditional FMCG, and the foods, etc. And then the newer challengers that are coming in. So the challengers are really doing a good job, whether it be in paints, whether it be in biscuits, or anywhere. If you see, the challengers are growing faster, and that is translating to again a dichotomy that we saw in the IT pack of large companies growing slower than the mid-sized and smaller companies. Similarly, what's happening in consumer is the delivery channel is becoming very much more important. So quick commerce is becoming far more relevant as a consumer delivery option rather than the producer of consumer names. So it's really shifting from consumer manufacturing to delivery. And that's where we see that the tilt in the portfolio is taking place.
Okay. Uh, would you play some of these platform companies, Satish, at all, or are just and if so, how do you value them? How should one look at valuations in some of these platform companies? And maybe not just Eternal, not just a Swiggy, but pretty much most of the platform companies. We had new listings, Lenskart, Grow. How should one look at valuations there?
See, I think the platform companies have to be broken down into two aspects. One is the routine platform companies which you use every day, and the episodic platform companies where you buy a pair of spectacles probably once in a year or twice in a year, maybe. So that's something which we need to understand and differentiate quite differently. And the routine platform companies which you use daily, the user charges are fairly depressed in the current context for the convenience that they offer. And if the subscription revenues keep going up, you could see many of these companies showing disproportionate profit growth. And that's the hockey stick effect we will start seeing in these companies. What is currently happening is there's a fair degree of consolidation of market share in the platform companies. and leadership is being quickly established. And therefore, it's an interesting space. We need to watch it. Valuations may look expensive, but may actually look cheap 3 years out or 4 years out when they start pricing all of their products and services.
You spoke about IT, and the major thrust that you gave on IT was the fact that uh, pick companies which are within the AI space. Um,
Uh,
Pretty much every company is talking about AI, right? All of the IT companies, pretty much all of them are providing AI solutions. How do you differentiate between them?
A little difficult at this stage, Harsh,
Yeah.
because what's happening is that we are seeing a situation where we don't know the quantum of AI and the type of work that each company is doing. So we need to differentiate between companies, and that will come through probably 6 months or 1 year later once there is clarity about the type of work that they do.
Yatharth Hospital's numbers, and I just want to quickly flag that off. Satish, I'm just going to interrupt for a minute. The top
Yes.
line is a record quarterly top line that they've posted. Profit, the EBITDA levels are largely the same as last quarter, so the margins have shrunk a little bit. That doesn't look too good because they've always maintained margins above 26% at least, or rather above 25% at least over the last couple of years. There's not been that challenge. My sense is that margins have seen a bit of a shrink. So you've seen volatility on the stock. Profit flat on a sequential basis. Typically, you don't look at these companies sequentially, but I'm just trying to give a perspective that despite record quarterly sales, profits are largely the same as last quarter. And that might mean that margins have shrunk a little bit. We'll wait and watch. There you go, 23% margin number on your screen, which means that margins have shrunk. So stock went up, it's come back off. Satish, any of the names within the hospital space or the healthcare space that you would target? You spoke about pharma earlier. Healthcare, is that something that interests you? And again, we've seen a run up. How are you looking at valuations in that space?
So I think the healthcare space is a very promising sector given its degree of penetration and the fact that as the country ages and becomes more prosperous, the demand for healthcare improves and increases. So we do have a decent allocation of hospitals across almost all of our portfolios. And we have a couple of names in our mid cap portfolio as well as our flexi cap and large cap portfolios as well. But we are optimistic on this sector, and we believe that it has a long runway of growth.
Satish, thank you so much for coming and speaking with us. We'll let you go on that note. Pleasure speaking.